Ron, my reaction to what I heard Rick just say was tell me something I don't know. In other words, the idea that, that the economy is performing better than the prior beige book, but not back to pre-COVID levels, is about as obvious a conclusion as I suppose you could anticipate.
Yeah, and I think, Tyler, also those data were compiled before we had the reemergence, if you will, of lockdowns in states like California, Arizona, Texas, and Florida, which have dialed back their reopening measures. And so clearly that's not reflected in the beige book yet, nor I think will be this fiscal cliff that everybody's talking about. Being a small business person myself, one can attest to the fact that any kind of deferrals on owed payments are now expired, and any type of assistance that one might have gotten as a small business person is also gone. So what small businesses and individuals do going forward is going to be pretty interesting, I think, because most of this runs out between now and the end of the summer, and most deferrals run out because if you got one, they were 3 months in length, and that's about it. And so I don't think the beige book captures the moment. It captures the past 2 months. And so I think the real question for the markets, as much as they're cheering the fact that the Fed said activity picked up in past tense, might be the operative phrase.
So, Seth, pick up on what Ron has just said there, and that is that it is a backward-looking survey, which it certainly is, but drill down a little bit as we look at the path forward here. Ron identifies the idea that some of the stimulus is going to fall away. There is the, quote, fiscal cliff that may fall away. What do you see over the next, let's say, 4 months, 100 days to the election day in terms of the economy?
Yeah, I think there's a lot here that's critical. I think the levels versus change thought perspective is exactly right. It increased from before, but we're still weak. I think the other point that the beige book makes that I think is going to be critical for the 100 days is that there's turnover in the job market that's super high. So we saw 2 months of strong job gains. We have more people employed now than we did a couple months ago, but you're still getting unemployment insurance claims of about 1.5 million per week. Right, per week. That's just a huge number. And so what's happening is everything is changing. Some parts of the economy are opening up, people going back to work, but then the small business concern that was just mentioned, I think, is absolutely critical. And all the while the small businesses enjoyed the initial pop of the reopening, you still have 1.5 million people per week getting laid off. And so you've got these growth flows, and I think it's going to be a real rocky patch. We had 2 months bouncing off the bottom that looked really good. Going forward, I think things have to slow down.
Steve, I think you're still there. Up until what point do the surveys capture the economic activity in these districts?
Usually a couple weeks before. I didn't check the exact dates, but it's usually a couple weeks before the collected on or before July 6th. So it's about 9 days old is the amount of time. And I was just reading the Dallas Federal Reserve's report in this thing, and I don't see much in terms of discussion of a resurgence in there, at least not immediately. But, it does give us some information about the months ahead, which is the idea that these PPP loans are going to run out, and that's going to be an issue. You have Ben Bernanke writing today about his concerns about state and local government layoffs, which are already happening, and you have concern about what's going to happen with the unemployment benefits running out. These are issues that I guess the market is looking past, Melissa, in my opinion, in that it feels as if these things are going to be resolved. We talked to Bullard yesterday. He talked about the idea that he expects additional fiscal stimulus or fiscal relief to come from Congress and the president. So it seems as if the market's baking that in, that they're not going to allow these things to fall off in a cliff sort of way. But they're going to have to happen in order for the economy to sustain the momentum in this report.